The markets are down, economy is suffering. I'm sure business is also going through a tough time, but you are sounding very optimistic to me. I like that. But why is that?
I should be careful because as I said earlier in this interview, I don't want to sound very optimistic. But I think the glass is now becoming half full than half empty. So the perspective has changed, and I think in the last time also when we spoke, the perspective has changed, because when we came into the last year, when we came into 11-12, I think there were a lot of high expectations and the macro was getting worse.
So the realistic Rashesh is now becoming optimistic Rashesh?
I think as I said, the macros are improving a little bit, not much unfortunately, but the expectations are also very low. So if I look at slight improvement in the macro, I think it makes you a bit optimistic, but optimistic enough to say the glass is only half full, the glass is not completely full, the glass is not overflowing at all. But I think in the last year the glass was becoming more half empty. Now it's more of that, because I think it's, as I said earlier, it's got priced in. There is extreme pessimism. India has not been as cheap as it has been. If you look at our market cap to GDP ratio, we'll get close to 0.6, 0.5 to 0.6 was what we are now. I've not seen India with our growth of even 5%, 6%, which is the worst case that all these analysts are expecting, India to be at about 0.5, 0.6 market cap to GDP. Can it last for another year? It can easily do that. But on a long-term basis, is India so badly off that our, the P multiples become 11, 12, and the market cap to GDP is 0.5, 0.6, and all of that? Unlikely.
FY13 for your business, for Edelweiss, glass half full, glass half empty?
I think the glass is always half full. I think the good news is the last 5 years, though, there has been a lot of stress in the environment. I think we have strongly believed that the glass is half full, and that is why we invested in newer businesses like insurance and asset management and housing finance and commodities and all. So the glass is half full. I think in financial sector overall, profitability will still stay under stress because I think the change in the regulation and the cost, when the cost pressures and all have brought margins down. The market scale up has not happened. Activity is still at a low end. So you will continue to face margin pressures, but you will continue to have to invest if you want to take a 5-7 year view on India, because as long as Indians are saving, as long as Indians are investing, as long as Indians are borrowing, as long as Indians are buying and selling, there is a lot of opportunity for all financial services in India. And India's household saving this year will be close to $600 billion. So I think with such large savings pool and so much activity going on in this country in the financial services, there has to be opportunity. Unfortunately, to convert opportunity into profitable opportunity, you will have to work very hard, you will have to be very smart, you will have to be very strategically clear, and your execution will have to be solid.
Final question. I don't want to get this one wrong for my viewers. What is your short-term market outlook, medium-term market outlook, and long-term market outlook? Just a summary of whatever we've discussed.
I think long-term the market outlook has always been very good. Unfortunately or fortunately, because I think overall, I think India's story is good. The market is clearly not overvalued or overpriced, and there is not a lot of expectations built in. So I would say on the long-term basis, I think fairly optimistic, fairly bullish on India, on the India story, on India corporates. One thing I did not mention, one of the things we are seeing when we deal with corporates have become very efficient. So the corporate profitability and the corporate economics and the corporate balance sheet will get more and more uncorrelated to the India macroeconomic, which is what we are seeing for the first time in India, because all along in the last 18-20 years I've seen India macroeconomics and corporate health, the financial health of corporate were always very correlated. I think for the first time we are seeing that even if the India macroeconomics don't improve in the coming year, corporate earnings will clearly improve because corporates are cutting costs, becoming more efficient and all that. So on the long-term basis, India corporate, India overall, very bullish. I think I don't think there is any second thoughts in our mind about that. On the medium term, I think Cautious because of all the uncertainty, and we would like to see the macro improving. We'd like to see inflation come under 7% at least for a couple of months. We'd like to see growth inching up again, because currently the cycle is still down. It needs to. So on the medium term, I would look at the macroeconomics a lot more strongly and want to start seeing some sustained improvement on the macroeconomic parameter. On the short term, as I said, I think sentiment has been very low. I think what we are sensing with some smart investors is they are starting to see buying opportunities. They are starting to feel a bit optimistic, and the market is also reacting to bad news in a good way. So I think on the short term, slightly optimistic. So optimistic on a sentiment basis on the short term, cautious in the medium term to look at the macroeconomic factors and only become really optimistic after the macroeconomic factors start improving. On the long term basis, optimistic as usual.
Just the perfect answer I was looking for. Appreciate your time, and thank you so much for joining us on the show.
Thank you, Nikunj.